Have you ever wondered where to invest your spare cash? You probably have some $1,000 stock somewhere and you're wondering, where can I put this money to make money for myself? Have you ever wondered about how to make passive income, make money while you sleep? Are you a newbie in the stock market space and you feel like everything about investment, stock, they all sound like gibberish to you? Well, worry not, because I have the ideal solution for you right in this video. So in this video, I'll be talking about the top 10 dividend stock you need to buy if you want to make some good passive income for yourself while you sleep. So all these 10 stocks were carefully selected by me based on my own experience, based on my research, and to make it more exciting, I brought in some sort of variations into it. I ensured to include a mix of Canadian stock, American stock. I also included individual stocks and ETFs just to ensure we have variations in the kind of stock we are going to be investing in. Hey everyone, I hope you guys are doing amazing today. My name is Ebuka and this is the Finance Wiz channel. If this is your first time on the channel, I want to specially thank you for joining the channel and watching this video, and I assure you you're going to get a lot of value from this video. And if you have come back and you've been watching my previous video, thank you for coming back once again. So I'm actually very passionate about providing personal finance information that can help you to navigate your day-to-day life. So if you're here to do so, I want to encourage you to like this video, subscribe to the channel, and click on the notification bell so you don't miss any of our episodes, because we have way more exciting episodes for you down the line. So before I get into these 10 stocks for the day, I want to explain a few concepts that you need to understand. So the question is, what are dividend stocks? Very easy. Now, dividend stocks are stocks that are owned by companies that decide to share some portion of their earnings with you as the investor. So it goes in form of distributions and comes in form of cash. So overall, it's safe to say that dividend stocks are good to have because it gives you extra cash in your pocket without you doing any other thing. It's a source of passive income while you sleep. You're making some good income when the dividends are paid. However, it comes with its own downside, which is the growth potential. Most dividend stock these days don't have the ability to grow as much in terms of the capital gains of the stock. Most times, high dividend paying stocks tend not to appreciate in terms of their stock prices over time. Now you can actually invest in dividend stock through various means. We have the individual stocks, we have ETFs, and we also have mutual funds if you want to consider that. So before you go ahead searching for that dividend stock that you want to buy, there are a few factors you need to consider. Number one is what I call the yield. So a yield is a basis to determine how much you'll be getting from a stock over time in terms of dividend. It also reflects what the future income should be based on the current prices today. Now, a rule of thumb you need to know is that when a business has an extremely high yield, it could actually be an indicator of a failing business. So you need to take note of that. Very crucial. So if you want to calculate your dividend yield, all you need to do is divide your dividend per share by the share price. The other factor you need to consider if you want to select a dividend stock is the revenue streak. How has revenue or the earnings of the business grown over the years? You want to know if it's sustainable, if the business has expanded over time. That's very important. The third factor to consider is what I call the dividend payout ratio. So dividend payout ratio is calculated as dividend per share divided by earnings per share. In other words, all it's trying to measure is what is the percentage of the business earnings that they want to pay out or distribute as dividends to you as the investor. So you need to ask yourself a very simple question. Is the business paying out so much and leaving almost nothing for reinvestment? For instance, if a business makes $100 in a year and pays out or distributes 80% of that amount as dividend, it means that it has just 20% for reinvestment in the business to ensure it grows over time, right? So the big question you need to keep asking yourself is, if a business is paying over 100% of its earnings for the year as dividend, how is the business actually financing its operations and expansion? That's a crucial question you need to ask regarding your dividend payout ratio. Another factor to consider is what I call the dividend streak. Now, dividend streak is simply saying how long or how consistent has the business been paying dividend over time. Now, in my selection, I ensure that most of the business, or 99% of the businesses I'm selecting or the stocks I'm selecting, have paid dividend at least over 10 years. So that's very crucial for you to consider if you are interested in dividend stocks. The last and most important factor I always ensure to consider when I'm investing in dividend stock is the industry that the business operates in. So you want to know what its fellow competitors are doing, compare, or I would say benchmark the financial statement of that business with his fellow competitors. If you notice some differences or significant changes or differences, you want to know why that has happened. Was there an occurrence in the business that just happened unplanned? But one rule of thumb you need to know is that most times what affects a particular competitor in the industry tends to affect other competitors within that industry. For instance, you want to assess if that industry is growing or if it's at a decline stage, or if there's a lesser demand or more demand for it. For instance, we have the oil and energy sector or industry, which most people are beginning to consider renewable energy because of the high demand for renewable energy in current times. So this factor is really important if you want to understand or identify the sustainability of that business that you're investing in their stocks. So like I said earlier, all these 10 stocks were carefully selected by me based on the aforementioned criteria earlier, which is the dividend yield, the dividend streak, the dividend payout ratio, the industry potentials, and so many more that I had considered. Now, some of these stocks I already have investments in them, while some others I'll be investing over the coming weeks. So if you're interested in knowing the outcome of my investment in the remaining stocks in this portfolio, please drop in the comments below and I'm going to reflect that in a different video. So let's get into the nitty-gritties of these 10 stocks I talked about. Like I said earlier, I split them into two major categories, the individual stock and the ETFs. So I'm going to go through the top 5 individual stocks which I considered before I go into the ETFs. So my number one on the list is what I call CVR Partners LP. It goes with the ticker symbol called UAN. So CVR Partners operates in the agricultural industry. What they do basically is to produce and sell fertilizers to different industries within the agricultural sector within the US, and they also sell other products like ammonia, nitrogen, ammonium nitrate, and so on. Now, if we go into the records to see what their performance looks like, it has a dividend growth of 169.55% and operating at a current share price of $81.68, which makes it even very affordable for many people, right? It has a yield of about 41.72% and a dividend payout ratio of 149.53%. So what that means is that if you have $1,000 and you invest in this stock, it means that you're going to be getting about $417.20 on an annual basis as dividend. Now, why do I love this stock? It pays dividend on a quarterly basis and it has actually paid dividend over 10 years consistently. That's amazing. So for me, once that streak of dividend is there, it's a buy for me. So the next individual stock I'll be talking about is what I call the North European Oil Royalty Trust. It goes with the ticker symbol NRT. So this business actually operates in the oil and gas energy sector, and this business has royalty rights in several concessions and leases within the Federal Republic of Germany. Now, the NRT stock is listed on New York Stock Exchange and has paid dividend consistently over 10 years on a quarterly basis. So if we get into the individual stats of this stock and how it's performed so far, it has a dividend growth of about 253.26%. which is amazing, almost double an average stock. Now, it has a current share price of $12.96, which makes it very affordable, and a yield of 32.41%, which means that if you have $1,000 invested in this stock, and based on antecedents, the stock has paid dividend on a quarterly basis over 10 years, it means that you'll be getting about $324.10 on an annual basis. Okay? It also has a dividend payout ratio of 159.09%. So overall, based on this stats, I think this is a good dividend stock purchase. The third individual stock I'll be talking about is the Nordic American Tankers Limited. Now, it goes with the ticker symbol called NAT. Now, this business operates in the marine shipping industry and has a fleet of over 24 crude oil tankers. It also acquires and charters double hull tankers across Bermuda and internationally all over the world. Now, if you've been watching from the beginning of this video, you already know I love stocks that have long dividend streak. In this case, it also has been paying for the past 10 years on a quarterly basis without missing any payments. So if we go into the stats, we can see here that the dividend growth is about 660%, and the current share price is going for $3.51, which is very much affordable for literally almost anyone. It has a dividend yield of about 17.09%, which means that if you were to invest $1,000 in this stock, in a year you'll be getting about $170.09. Now, it has a dividend payout ratio of 857.14%. Like I said earlier, If the dividend payout ratio is really high, you also need to check that the stability of the business is there and the business is sustainable considering the industry it operates in. So the first stock I'll be talking about is what I call Fortis. Fortis is a Canadian business that operates in the utilities sector. It goes with the ticker FTS. So if you love Canadian stock, then this is for you. Now, why do I specifically love this stock? Apart from the fact that it operates within North America, that's in Canada and the US, it also operates in the Caribbean countries. It also proposes to invest about $20 billion into so many investments, like investing in renewable energy and other alternative sources. Now, in terms of sustainability of this business, it actually provides its services to over 500,000 retail customers across the US alone, which gives you some level of comfort around the business ability to survive. Now, this business is listed on both the New York Stock Exchange and Toronto Stock Exchange. So let's dive deep into the stats. Okay, as you can see, it has a dividend growth of about 1.19%, which compared to the others is quite low, but more sustainable, of course. It has a current share price of $42.06. It has a yield of 3.99% and a payout ratio of 78.80%. Now, if you are to invest $1,000 in this stock, it means that in a year you should be getting about $39.90. The fifth stock I'll be talking about is TELUS. TELUS is a Canadian company that operates in telecommunications sector and it goes with the ticker TU. So this stock is listed on both the New York Stock Exchange and the Toronto Stock Exchange. Also, just like other stock that we mentioned, it has a 10-year payment streak of dividend and has not missed any quarter. So let's get into the stats so you can see for yourself. Now, this has a dividend growth of about 0.8%, a current share price of 18.97%, which is also very much affordable, a yield of 5.65%, which means if you invest $1,000, you're going to be getting about 50 cents over a year, and a payout ratio of 144.98%. So this is what to try if you're interested in telecommunication stock or you're interested in a Canadian stock as a whole. So those are the 5 stocks. Well, I thought to give you a bonus stock that might actually be very helpful to you if you need to. It's called the Brookfield Reinsurance Limited. It goes with the ticker symbol BNRE. Brookfield operates in 2 major segments. Of course, the reinsurance and then the pension risk transfer. It's currently listed on the New York Stock Exchange. So unlike the other stocks I earlier mentioned, unfortunately this doesn't pay dividend on a consistent basis across the past 10 years. It's paid dividend, however, it's not been so consistent over time. Well, the reason why I picked this stock as a bonus is because the market capitalization was about $1 billion, which gives you some level of stability in terms of trust of the business. Now let's dive into the stats of this dividend stock. It has a dividend growth of about 1,166.58%. So this amount is simply because it doesn't pay dividend on a consistent basis. Okay. Now it has a current share price of $30.69 and a yield of 19.23%. That's to say, if you have $1,000 in this stock, you'll be getting about $192 in a whole year as dividend. All right. It has a dividend payout ratio of 85.77%. Now, something I want to point out is that these dividends tend to add up when you have investments in a different stock. So it's worth trying and thinking about. So in the next few minutes, I'm going to be talking about the ETF stocks, which I think are worth the buy if you are interested in dividend stock as a whole. Now, I have a couple of ETFs I'll be talking about here. The first is what I call the iShares Core MSCI Canadian Quality Dividend Index ETF. It goes with the ticker XDIV. So if you search in your broker's platform, say your Questrade, and you're looking for the stock and you type XDIV, you're going to be able to see the stock for purchase. All right. It has an expense ratio of 0.12%. It has a stock pool of 21 stocks and a yield of 4.11%. That's to say, if you were to invest $1,000 in this stock, you will be getting about $41 on an annual basis. Okay. The asset base is $688 million as an investment. So if you're thinking, what are the stocks that make up the top holdings? We have so many of them and they're very popular names that we know. We have the Bank of Nova Scotia, we have Manulife, we have RBC, we have CIBC, TC Energy, Sun Life, and many more very strong brands that we know today. So that gives us a level of comfort around the investment in this ETF. So the next ETF I'll be talking about is the FTSE Canadian High Dividend Yield Index ETF. The ticker symbol is called VDY. Now, the expense ratio of this stock is 0.22%. And by the way, if you don't understand the concept of expense ratio, check my previous video. I explained the idea behind expense ratio, and I explained the concept and how to manage it. Okay. Now, for this one, the stock pool is 47 stocks. It has a yield of 4.15% and an asset base of 1.92 billion. Now, if you have $1,000, like I always say, you have about $41 as your annual income in terms of dividend. So if you're considering the top 10 holdings of this ETF, they're quite the very popular names like RBC, TD, Enbridge, Bank of Nova Scotia, TC Energy, Bank of Montreal, Suncor, and CIBC, and many other amazing brands that we already know. The third ETF I'll be talking about is what I call the Vanguard International High Dividend Yield ETF. It goes with the ticker VYMI.IV. So if you want to check it out, type in that VYMI.IV and you're going to find this ETF. The expense ratio for this is 0.22%, a stock pool of 1,352 stocks, and yield of 5.23% with an asset base of 6.07 billion. So this is what the buy, I think. So the top 10 holdings for this ETF include Roche Holding, Shell, Novartis, Toyota, BHP Group, HSBC, and Royal Bank of Canada, and quite a number of other businesses that are reputable. The fourth ETF I'll be talking about is what I call the Vanguard High Dividend Yield ETF with the ticker symbol VYM. So you can search for VYM and you're going to find this stock. It goes with the expense ratio of 0.06% and a stock pool of about 465 stocks, a yield of 3.21%. That's for $1,000, you're going to be getting a $32 dividend on an annual basis, an asset base of 61.08 million, right? Now, this large asset base also gives you some level of comfort in terms of their experience in their investments, okay? So the Vanguard High Dividend Yield ETF has its top 10 holdings in businesses like ExxonMobil, J&J, which is Johnson & Johnson, JP Morgan, Procter & Gamble, Chevron, Home Depot, Merck & Co., PepsiCo, and many others. So these are reasonable businesses that I would consider if I was in your shoes as well. So these are reputable businesses that will give me some level of comfort around investing in this ETF. So the last ETF I'll be talking about is in the real estate sector. It's called the Vanguard Real Estate ETF with the ticker symbol VNQ. Now, if you search for VNQ, you get this stock, and it has an expense ratio of 0.12%, right? Now, with a stock pool of about 165 stocks and a yield of 3.74%, it has an asset base of 62.89 million. You will realize that for all the stock I selected, all these ETF stocks I selected, I ensured that they were businesses and stocks that had a large asset base, so that it gives us some level of comfort around investing in them. Alright, so those are the 10 stocks I felt that would be worth the purchase if you were to consider investing in dividend stocks today. Now, if you are interested in more stock videos or more ETF videos, please drop in the comments below and I'll provide you some very helpful tips based on my research and my personal investments that I'm also doing as well. Anyways, thanks for taking the time to watch this video. I appreciate your time. And if you enjoyed this video and you gained a lot from this video, please feel free to like, subscribe, and share this video with your friends so they can also enjoy the gems that you enjoyed from this video. Alright, thank you. Take care till next video. Bye.